Reserve Bank Governor Gill Marcus has left the benchmark repo rate unchanged at 5% today. There seems to be a nasty combination of weakening growth and persistent inflationary pressures in the local economy. The Reserve Bank has left rates unchanged at all its policy meetings this year, except for July, when it decided on a surprise cut of 50 basis points.
Since the previous meeting of the Monetary Policy Committee, the domestic growth outlook has deteriorated, while the upside risks to inflation have increased. Widespread labour market instability and work stoppages have reduced output and export volumes, with the potential for employment losses. Risks to the inflation outlook have been increased by a further depreciation of the rand exchange rate, partly in response to these developments, as well as by a possible higher trend in wage settlements and the impact of the reweighting and rebasing of the CPI basket by Stats South Africa. At the same time, the global environment remains challenging.
Well, in studio with me, my guest host Bridget Taylor and Warwick Lucas. Now, Bridget, you said this is one of the best MPC meetings you've seen. You've loved her commentary. What was so good about it?
I loved the MPC. No, not at all. I think it was, it was very, very, for me, it was so positive, is that for the first time, MPC didn't just regurgitate numbers that we all know and deliver a decision. She made a lot of statements around concerns around all the issues that have plagued the backdrop that we find ourselves in. And she talks about real issues and things that needed to be spoken about.
So frankness
She was very frank about the concerns around wage settlement, the knock-on effects with regards to the economy and the macroeconomy, fiscal policy being prudently managed, confidence in terms of decision making. These are things that we talk about often with regards to Manuan coming up, with regards to our economy that we believe so strongly in, with an MPC that has done the best that they can and try to create a policy that has been empowering to our nation. Yet there's factors that are beyond that control, which effectively, and she used the word, she said, these things can derail all of monetary policy's commitments. And that unfortunately is de facto. And that's what we talk about in terms of the risks to the position going forward. And it was really refreshing to hear the governor stand up and actually talk about what we're all thinking about.
So Warwick, she's prodding other policymakers, fiscal policy, industrial policymakers to really be introspective and sort things out. And we've had all these policy reviews and growth paths, etc., but seemingly we're not getting onto the right path.
Well, yeah, absolutely. I mean, what she cited there is quite frankly a number of reasons why she could choose to hike interest rates and won't. I mean, you've got weakness in the rand, you've got global risk aversion, you've got a widening current account deficit, and then you've got a rebasing of the CPI via the electricity prices. And of course, the electricity price at the end of the day is a cost-push type inflation, and I'm getting a sense of a much more pragmatic sense in the Reserve Bank that they'll say, well, okay, inflation's up, but at the end of the day, we're not just going to hike rates in the face of cost-push like that.
That seems to be the House view, Bridget, that the next step is higher rates.
Look, there's definitely still a risk to a downside, and the reason I'm mentioning is the fact that the global growth scenario and the South African growth scenario, so her GDP outlook, has deteriorated. That is a major concern. Your drivers for inflationary upside pressure predominantly are being driven by the rand weakness and wage increases, which are effectively going to have a knock-on effect, she went on and on and on about the settlements and the unions, etc. Now, those two core factors, because of the unrest in the mining sector that then became a transport issue, that then became an agricultural issue, created a lot of negative sentiment, which drove rand a lot weaker. So these underlying issues that are at play in the economy with regard to slow decision making around how these issues are going to be handled, poor decisions being made around wage negotiations because we have a long-term sustainability issue, we have a competitiveness issue, etc. These are all not being remedied, and unfortunately the knock-on effect of that means that we're up in an inflation targeting band that is now being extended further and higher, so that is also deteriorating. So it puts them in an extremely tough position, and these are factors that she can't control.
Bridget, we've got a minute left. Foreign buyers of our bonds are still continuing enthusiastically.
100%. So foreigners still think that we can see interest rates lower. They're in an environment where interest rates are at all-time lows. They see value in South Africa. However, we as South Africans see the fundamental underlying issues as a key problem. For them, it's hot money. They're putting it into South Africa. They can remove it as quickly as they put it in, and for them, they still return.
Warwick, some parallels for our retail sector. Foreigners seeing opportunities the locals don't?
Quite likely. I mean, I might live here, but I don't get to make the rules. You hang out your shingles and they can buy them or sell them. Isn't that right?